We're heading now to Nigerian markets. NSE ASI index shared 0.59% today, closing at 37,589 points. The losers on the day were UACN, Nigeria Breweries, Guinness, WAPCO and Presco, while the gainers included Champion Breweries, Guaranty Trust Bank, Evans Medical, UPL and Cement Company of Northern Nigeria. Now, with the much-awaited half-year results of some top-tier banks still pending, the Nigerian ASI index continued its bearish trend as we saw more profit-taking today. We saw consumer goods stocks coming under pressure. Well, Christian Orajekwe, an equity analyst at Investment One Stockbrokers, is here with me to take us through market trading today. Thank you so much, Christian, for being here. Now, we're looking at another bearish session for the Nigerian stock market, pretty much in line with what analysts forecast last week that we were going to see this week. But today we saw consumer goods stocks coming under pressure. I'm looking at the top losers: UACN, Nigeria Breweries, Guinness. UACN losing as much as 6 naira. That's a huge loss for UACN.
Like you said, the market has been under pressure in recent time. We saw about 1.01% last week. It lost 0.59% yesterday and today. If you look at the way the market has been losing in recent time, investors seem to be concentrating more on consumer goods and industrials and the banking sector. The reason being that some of these stocks are quite resistant stocks. Investors have been holding position in this stock, before now, and now that the market outlook it's looking very bearish. So investors are concentrating on stocks within these components, in terms of profit taking. So they've been exiting positions in this stock, and that's why we see the decline, we've been experiencing in the last couple of trading sessions. Is
this something we could see continuing for the rest of the week?
Well, it depends on when the market starts correcting. Like I said, these stocks are still fundamentally sound. So to the extent that the market is still declining, investors may still continue to take profit on this stock. But as soon as the market starts reversing again, I expect that investors are still going to come back to these stocks to take more positions.
It appears the market is waiting for some kind of catalyst to come in to spur or spice things up, as it were. And I guess earnings would have done that. But the tier 1 banks are still holding on to their Q2 results. We haven't heard any more than that. So for you, what do you think could prove to be a good catalyst for trading right now?
Well, as it is, if you look at what happened in two weeks ago, the results came out, particularly for some of the tier 1 banks. The results they released were quite impressive. For the consumer goods sectors, the results were mixed. We saw Nestle did an impressive number. We saw Cadbury did something good. Unilever didn't do so well. Navigas didn't do so well. So to that extent, it's going to be pretty speculative to assume that by the time the tier 1 banks start releasing their results, that is going to serve as a catalyst for the market. Because UBA, for example, is one of the tier 1 banks. The result that UBA released was not as impressive as people had expected. The management guidance, as we saw at the beginning of the year, is what we saw in terms of the result they released half year is not in line with management guidance. So to that extent, I do not think that by the time the tier 1 banks start releasing that result, that will serve as a catalyst. So that's why in-house we hold a neutral to negative view of the market, because I think there are more factors that could drive the market down, against factors that could move the market up. Macroeconomic factors are there. Opportunities that are beginning to emerge in the fixed income markets are also there. Investors seem to be doing as a shift from equities to fixed income.
Adjustment of their portfolio, looking at where they can get better returns in the short term.
So prices are beginning to go up in the fixed income market. I mean, we see yields within the 13%, near 14%. So I think it's a safe haven for them. So they are locking their funds in this market. So if opportunities emerge in the equities market again, they could come back. But for now, we can't see any catalysts.
So does that mean that we could be looking at a new resistance point for the ASI index, where we saw it slide below 38,000 points yesterday, and of course it's dropped further today? So what new resistance points could we be looking at if this trend continues?
Well, I don't see the ASI index falling below 37%. So I think by the time it gets close to the lower end of 37%, we can see another upside again.
Now, while all this bearishness has been going on, investors taking profit here and there, defensive sectors not so defensive at the moment, what sectors do you think could provide good value for discerning investors, as it were? Is it particular marketing stocks? Is it IT? Where do you see value?
Well, unfortunately, I think the market is not as big as we think. Investors look more in the industrials, consumer goods, and banking. The consumer goods are already they are less appealing right now in terms of valuation. Prices are so high, their PEs are so high, I think the consumer goods PE is about 31 on average, and most stocks within that bracket are even trading above the industry average. For investors, I think they could look at the banking sectors, really, particularly the tier 1 banks.
We always come back to the banks, even though we see so much in the turbulence, the uncertainty, the CRR that the market has pretty much been obsessed with in the last 2 weeks, and then we still come back to the banks. I agree with
you, but even in the midst of these factors, if you look at valuation-wise, apart from the tier 1 banks that seem to have fallen within the whole position, some of the tier 2 banks are still buy ratings for us, and the industry PE in general is still very low. I think it's about 6.17%. If you compare that to emerging market PE, is about 6.7%. Nigeria 6.21, emerging market 6.71. So you could say and compare that vis-a-vis other sectors like the consumer goods have gotten as high as 31, industrial is still high. So you think the banks are still lowly valued, and investors actually there are still ample opportunities within that sector. Okay, well, it would seem that I mean, in terms of options, that's still limited right now. We're looking at volume and value. That has been pretty much flat, as it were, just not exceeding 400 million. At least since Monday, first day trading of the week. I'm looking at value for today, 4.7 billion. So is there a range we're perhaps going to see going forward for this week? We expect volume to continue to trend within this range. The reason being that investors are still very conscious. I looked at the market today. I saw bids. Investors are quite conservative with their bids because you don't know how long the market is going to continue to decline. So people are not very aggressive in terms of taking buy position. So we expect volume to continue to trend within this bracket, at least for the rest of the week. Okay, now with this latest development that we've seen in the market, particularly from the banking space, do you think that could in any way significantly change investing psyche of investors, particularly retail investors? Because right now we still have a bit of uncertainty with the banks. We don't know how much of that the new liquidity condition is going to affect some of them, especially the ones that are most exposed to the CRR policy. So do you think we could see some kind of significant shift that we can put our fingers on? Significant shifts, sorry. In terms of investing behavior on the part of investors? Well, a bank. In terms of shifting stocks around, or perhaps looking more into a particular sector as against or floating from one sector. Okay, like I said earlier, banks are lowly valued compared to the emerging consumer goods and the industrials. So if investors are not looking at banking sectors, I know Nigerian investors are really. They don't want to trade in the insurance sectors stocks, for example. They don't want to do IT. I think investors' awareness as some events in these sectors are not really good. Are not really, What about penny stocks? I know we did see some activity in some penny stocks. So that could be a good area for investors to look at. Well, I agree, but investors are not very bullish with some of these penny stocks because limited information, quite a couple of reasons that could constrain them. So even though we see some of these investors trying to key in some of these stocks, it's not really sustainable. So for Champion Breweries, for example, I don't see this trend being sustainable because... Even though Champion Breweries is the best performing stock for today. But if you look at the company's performance in Q2, in the first half, it wasn't really looking very good. So that could give an indication that, savvy investors who are knowledgeable are not going to key into the stocks. For those who are not knowledgeable, they could just play around the stocks within a few time, and the gains will still come down again. So if investors are not doing banking, then the next thing is to opt out of the market, really.